Welcome back to a new video in the masterclass. Today we're talking about internal and external liquidity. Why do we need these? We need them to determine our grow-on liquidities, or in other words, our targets in the market. We also need them because the market is crucial for us as ICT traders. This allows us to overlap our market maker model. At the highs and lows, we can accordingly also use this to identify our reversals or continuations. All of this will be covered in much more detail later in the masterclass. So don't stress if some of the terms don't mean much to you yet. And last but not least, these liquidity pools help us optimize our trade management because certain external targets are often not reached on the same day, but rather 1 or 2 days later, or sometimes even the following week. However, we usually get a take profit at the internal liquidity within the same macro, meaning within our time of interest in our trading session. Now let's look at this graphic. I've drawn all of this out for you here. Here we see the point about old highs or lows. If we carry over the old high from the previous model, for example, we can see in our new model where we again have a balance here, whether it's one created for VLUCA because there was very strong cost volume, the market balanced back into this, respected the old high, and we get an internal reversal there and a higher time frame continuation. This means we displace higher, we retrace back into this leg. This means that now we not only have an external target, but also an internal one. And since we've now determined through this movement that this area up here is our drawn liquidity and also our target, we can continue to observe whether we have a trade setup. We would get, after that, we wait for our time of interest, watch for manipulation there again, have an even smaller target, and now overlap this market maker model with this one and even this one. That way we have 3 highs that we can target. And from there, we can then take our trade to the first high with TP1, the second high with TP2, and up to our external high with TP3. And assuming the market wouldn't be able to generate the full volume on that day to reach all the way up there, we still would have made great profits here and might have another setup the next day that would look like this, up to this external liquidity. Of course, I wouldn't be myself if I didn't have some great examples with me. Here you can see it again in a graphic combined with our time cycles, in the sense that we get the reversal from the previous cycle low, recognizing the sweep here. After breaking this level, trampoline, spring, boar, we have our internal buy-side liquidity within our range, and up here, our external liquidity. In this graphic, we see the same thing for a sell model. We sweep the previous cycle high, reversal formation, with internal and external targets. Here's an example from a chart. We sweep the previous field low, which is also a weekly low here. Here's another example of that. I've recorded that for you in another video. Then, with SMT, we get our reversal here and target the first weekly high up to the previous month's high, which counts as our external buy-side liquidity. I also want to show you this in the lower time frame in a chart example, like on this particular day. We take out the Asia lows, sweep them with a reversal, then build bullish order flow with higher highs and higher lows, as you already know, and then we have our targets. If we rewind to the AM session, we have London highs above us, Asia highs above us, previous day highs above us, and even the previous month high above us. On this day, I would at least be very confident with longs up to the previous day high. Whether the previous month high will also be reached on the same day is, of course, possible, but the reason why we take partials at all these highs is because this target, for example, could also be left open for the next week. As we can see, this day was a Friday, and usually higher time frame market maker models for a week are completed on Fridays. That's a little gem. You can make a note of it, so I'll repeat it again. Regarding the weekly delivery, usually if the target for the week hasn't been reached yet, this is usually reached on Friday. So let's fast forward. Profits are taken out, it's a high, then we see if the market comes to our session at 9:30 and manipulates that level. I still remember it by heart. Now, if it doesn't do that, your 90-minute SMT is triggered at the open, again generating internal liquidity. This here is internal liquidity because we pause just before a high in the higher time frame. That's an algorithmic signature, and following that, we get the reversal on the same day all the way to the previous month's low. That's how it works, my friends, and with that, I wish you much success in your studies. If you have any questions, feel free to tag a Tafar in Discord and take care. Ciao, ciao.